All right, it feels like every other day we're hearing a deal about OpenAI doing a deal with a public company or some other private company with an investment and valuations moving higher. Can we just talk very quickly about investing in private companies? We often hear a lot of hand-wringing, or people have a lot of hand-wringing about investing in the public markets because valuations are stretched and we're very close to record highs. Do you have similar concerns about the private markets?
So it's a great question. It's the number one question. I think what is so critical for us when we think about investing within private markets, and especially within private equity, is the understanding that there's a meaningful amount of innovation, AI and outside of AI as well, that is taking place within private markets. And there's a couple of reasons for that. One, when you think about where those early stage startups and the amount of innovation that is needed for that, you usually need patient strategic capital to be alongside that. That's one reason. Two, dissimilarly to 20 years ago, where we are now, the abundance of capital within private markets, that money is looking for a place to go. And even when you look at the valuations within just the top 3 private companies, those valuations would put it within the top 30 companies within the S&P 500. So when we're thinking about that private market ecosystem, and when we're thinking about advising our clients on how to invest in that space, we see meaningful opportunity, we see meaningful innovation and earnings growth opportunity, and we see very meaningful diversification opportunity given the concentration that we've seen within public markets in the Mag 7 and the hyperscalers. All
right, so sorry, I know it's not just a yes or no question. There's a lot of nuance to it, which you just kind of broke out. But I'm just going back to a report that we saw a few days ago from Forge Global. If you look at the quote-unquote private Mag 7, the biggest 7 private companies, their value has grown since the end of 2022 in less than 3 years by $1.2 trillion in combined value. It's pretty much quadrupled. Is that frothy? And how does that compare to the public markets that we continue to say are frothy?
I think there's two things. Whenever we think about investing in equity in a company, whether it's public or private, valuation expansion is one thing, but if that earnings growth and the revenue growth potential is growing alongside of that, that makes us comfortable in terms of valuations moving forward. On the public market side, even though we've seen valuations and market cap really accumulate within the hyperscalers, we've actually seen valuations from a forward earnings potential actually come down because we've seen earnings growth realize. On the private market side, it's a similar type of story. We're seeing, when you think about artificial intelligence and the impact that it's having within the private company ecosystem, it used to take well over a decade for some of these startup and smaller companies to reach 10 million in annual revenue. It used to take a decade. That is now closer to 12 months. That's a meaningful amount of profitability and profitability improvement that we're seeing within that space. So when we think about valuation expansion, there are certain parts of that AI ecosystem and private company ecosystem where it's justified.
Okay. I want to get to some of your data, also some data from Vista Equity Partners. Software as a service, you see it as a $3 to $5 trillion opportunity. You also say about 95% of software companies, at least as of March of this year, are private. So if you really want to get involved in this AI trade, it seems like your research is leading to the idea that you got to invest in private companies.
100%. We think of it as a barbell approach. When you're usually thinking about tech innovation cycles, you have the infrastructure layer that comes first. We saw that in the tech and cloud computing cycle in the 90s to the 2010s. And then you start to shift to the application layer. When we think about how that history parallels to today, it's a similar story. We're seeing hyperscalers and semiconductors dominate the value creation within artificial intelligence so far within the semiconductor space, and the infrastructure space has happened in public markets. We think we're on the precipice of moving towards the application layer and the platform technology layer. When we think about that, it's that shift from software as a service to service as software, which in the simplest form means automation of core business functions, automation of certain parts of the labor force. And that's a meaningful opportunity set. And right now, a majority of those companies, and we think a majority of those companies within the next decade, are going to be within private markets. So that barbell approach is extremely important.
All right, very quickly, I want to lean on your other expertise, which are the public markets. We were just talking to a guest about this shortly ago. NVIDIA, since it announced that $100 billion investment in OpenAI, it's higher, but the rest of the Mag 7, the basket of stocks, is lower. So when people are trying to invest in this AI revolution, a lot of people call it, in the public markets, is it a single stock investment? Is it a basket of stocks like the Mag 7? Is it the triple Qs? What's the best way to do that?
Active management is key. I think when we think about what the next decade of leaders within the space are going to look like, history has shown us that it always perpetually changes. It should be a basket of names. It should be within areas where we find that there's going to be meaningful earnings growth, and that's going to be a selection of high-quality companies with hopefully cash flow positive, durable earnings growth that we can see and have visibility into, CapEx lines of sight that we have visibility into, and revenue drivers that back that. But selectivity is key. The leaders of the future over the next 10 years may not be the leaders that we've experienced over the past 10 years. So active management is crucial in this space.